Good morning, trade pros. Welcome to our morning market update. It is Monday, November 24th of 2025. We got a really good update for you scheduled and planned today. Got a lot to talk about, some earnings or some news reports coming out this week, as well as a holiday shortened week, and we got a ton to go through. So let's get through it, including the trading plan for today at the very end. All right, first things first, I got to adjust my armrests. They have to be at the same height. Oh, there we go. All right, so here we go. So first and foremost, markets are up across the board in the world and in the U.S. as well. S&P, NASDAQ, Russell are all slightly higher actually. The U.S. dollar is soft this morning. Okay, the yields on the 10-year are holding steady. Oil's under a little bit of pressure. It's down 0.6%. No, that's driven on geopolitical tensions easing. So it's on the oil front. You know, the less drama there is, the worse oil does. Oil thrives on uncertainty and goes up and bids, especially on geopolitical tension that affect it. Gold is stable and Bitcoin is slightly softer, down to 86,000. Quite a bit drop over the last couple of weeks. Ethereum is down 0.5% as well. All right, Meg 7 in the pre-market is moving sharply higher. The 7 magnificently large cap stocks are up. Alphabet is up 3% on its own. So big move pre-market. I think we're starting the week out with some risk on appetite, and people are wanting to take on some risk for the Thanksgiving week. And I think that's a function not of wanting to get riskier because it's Thanksgiving, but you're not as doomsday negative because it's Thanksgiving. You know, you start doing your gratuity journals in the morning, you implement new practices, you have time around the house, you're giddy, you're spending time with your kids finally, you're going out, taking your wife on a dinner date, whatever it is, you're excited to be away from the office, to be away from work, and it takes away the sellers naturally by selection, right? They're away, and it puts a bit of a bid and upside to the market during the week. It's actually called the turkey trade, where if you get long before Thanksgiving and sell it the day immediately after, you do realize a return of something less than 1%. But nonetheless, there is a pattern. I don't know if this one's going to play out this way this year. But Mag 7 higher, led by Alphabet. All right, here's the shortened hours for this holiday week. So first, in the futures market, Wednesday, we get a regular close at 5 p.m. Eastern time, okay? But on Wednesday at 6 p.m., the normal reopen, it won't happen, because Thursday is closed completely. So Wednesday at 5 p.m., the market is going to be closed until Thursday evening at 6 p.m. when the futures market reopens for the next day, which is Friday. All right. So again, Friday then goes up until 1:15 p.m. Eastern, and then it closes until Sunday at 6 p.m. for the normal reopen. Futures are a little bit different with their hours. I don't know why it's so confusing, but it's because they're one of the markets that have been open 24 hours, 5 days a week. All right. That's why it's slightly confusing, because the reopen at 6 p.m. Eastern is usually for the following day. But basically, if you put this all together, Wednesday, everything is good to go. No evening session on Wednesday. Thursday, we're closed all day. And Thursday evening, we open for an evening session. And it closes early on Friday at 1:15 p.m. Eastern time. See, simple. Pretty easy. Thursday close. Well, stocks is easier. If you want it to be easier, just follow the stock calendar. All right, Wednesday, regular hours in stocks up until 4 p.m. Eastern. That's the closing bell. Thursday, close for Thanksgiving. All right, all day. Friday, it closes early at 1 p.m. Eastern. Futures give you 15 minutes extra so they can have a settlement close, because there's a lot going on in futures. Okay, so the big picture for this week is it's a very data-heavy but short week. So there's going to be some fireworks this week for sure. It's going to be lower liquidity, okay? And we're getting high impact U.S. data that's coming out front loaded into the week. So get ready. There's going to be some movement. The key focus here, though, is retail sales this week on Tuesday. All right, and that's at 8:30 a.m. Eastern time. Why is that the key focus? Well, market's going to use this week's data to price December Fed expectations. We don't have much. All right, we just found out we're not going to get a jobs report. We're not going to get the latest number and the new numbers until after the Fed meets on December 10th. They're coming on December 16th with the data. So the Fed is going to steer this next decision pretty much blind. They will have retail sales data, though, and that comes out tomorrow. Normally, it's, medium impact, but it becomes high impact considering the circumstances. So know that tomorrow before the U.S. stock open, you're going to have key major economic data. Headlines expected to be up 0.4%. We're going into the holiday season, but this retail sales data slightly delayed. Bank of America says there's soft but improving household spending, which helps that number potentially be higher. All right. Lower income is stabilizing, but still weak. Traders are watching for any sign that U.S. consumers are slowing their expenditures into the all-important Q4, when you should, in fact, be opening your wallet and opening your mind to consuming things you probably don't need. I'm going to call it straight. You know what I mean? Like, my 60-inch TV is not good enough. There's been new technology since, and it's 75-inch TV is going to be better. I don't know. I'm not actually making fun of people. A new TV actually makes sense, to be honest with you, on a Black Friday. Anywho, there is expectation. That's what traders are going to be watching, rather, this Tuesday at 8:30 in the morning. This is a delayed report, so big surprises could shift Fed odds relatively quickly. So be on the lookout for that. All right, then Tuesday and Wednesday, we also have consumer confidence and Richmond Fed and Dallas Fed Wednesday. Richmond Fed is on Tuesday. Consumer confidence is also on Tuesday. And then Dallas Fed is on Wednesday. These will also help guide like the Q4 growth forecast, the growth outline, the growth picture, if you will. All right, before the next payrolls and CPI report, which neither of them will be before the next Fed meeting. So that's it. This is what the Fed has to deal with, guys. Consumer confidence, all right, Richmond Fed manufacturing indices, Dallas Fed on Wednesday, and retail sales. And somehow these non-significant, typically, reports are going to form the basis of the December meeting, all right? But let's see, maybe the Fed will still cut. But the point here is that let's see how the odds are adjusted. And based on how the odds are adjusted for a probability of a rate cut in December, all right, the market will be whipsawed around by that. So you don't have to think, what does this mean? How does it affect it? Just follow the Fed watch futures, and that will signal the probability. It's the official probability for a Fed rate hike in December. Just type in Fed watch futures, track that, and you'll see how well it correlates to the market. Okay, rate cuts expected, upside momentum. So it's an inverse correlation. Since there's so many Fed implications for this, and this data will actually drive the rate cut odds, Fed's Waller is one of the very few speakers this week on the wire, and I'll give you his notes really quickly. He said data hasn't changed much since the last meeting. He is supporting a December rate cut. Okay, he's kind of slightly dovish, so it's not really a big event here for him saying that. He said January will be data heavy, needs a meeting-by-meeting approach. September jobs likely revised down. Inflation has ticked up but should start easing again. Says the Fed could turn more cautious if data rebounds. And he said tariff inflation impact is small and one-off. So this is really cool because what Waller is trying to say is let's just cut in December. Let's get this cut going. In January, we could start being data dependent, but we kind of worked up the entire market. Let's give it the cut it's looking for. So these kind of notes are very important. These kind of speeches the Fed speakers do are important because, again, it impacts the rate odds. Friday, we get Chicago PMI on a holiday shortened week. It's baffling, but I guess they're backlogged with data, so they got to release it. I'm planning to not even turn on the screen. All right, so here's the takeaway very quickly for us. Retail sales tomorrow is a key catalyst, 8:30 a.m. Eastern time. All right, expect lower liquidity, lower volumes, sharper moves, and month-end flows. You know, there's a lot that's meeting the market today that's gonna cause some whipsaws. All right, be careful as well because when you're in a holiday weekend and there's a lot of the main like big professional traders, not in size, in trading size, not body size, but when a lot of the bigger traders are kind of away from the desk, the traders who trade less size tend to have more influence in the market, and they're not usually used to being the ones in the spotlight. It's kind of like the B team skating around on the ice, or the junior hockey players on the ice in the preseason game where they're like showcasing their rookies, but their main players are resting for the real regular season open. You know, they're trying hard. They're great. They're wearing the uniform, but it's just not the same. And everybody knows it, including them. So this is the kind of week we're dealing with the whole week. So if you ever wanted to get some stuff done, pro tip right here, You get some stuff done, take a little bit of a break. And even if it's not market related stuff, great, go whatever. If you've been waiting for some time to do a project, or you're waiting for some time to formally write out your strategy, which you should have already done, trading journal, all that stuff. If you're waiting some time to work on some stuff in trading, around trading, or outside of trading that doesn't involve being in a trade, now's the time. I give you permission. This is probably the week you want to do it. Considering all the closures and all the family stuff coming later on in the week, you might want to take a few days for yourself. All right, at the very least, end it early. Let's turn around. We're going to look at some levels and stuff and then build a trade plan for today. Because the way that I see it, you really only have kind of today and tomorrow, and then Wednesday is like going to be very, very light on volume depending on how things go. And then that's it. The week is done. Thursday and Friday are kind of no-goes for me. So let me look at the comments. Greetings from Germany, David. How are you doing, my brother? You too, sir. Have yourself a great weekend. Or great week, rather. Lewis. Morning, sir. Polly. Good morning. J-Rad. Good morning. Hector. Gobble, gobble sounds. That's the sound of Thanksgiving and the turkeys running around. Marco, what's up, buddy? All right. We've done a really good sounding gobble. I don't want to do it again and screw it up. Let's take a look at some of the stuff. Okay, let me take these notes off the side. I just want to see what I had written as a call walls, put walls, because I want to adjust them first on this chart that you're looking at on the left. Call wall is 67.45. That's kind of cool. That one doesn't change today. The 10 and the 20 have some action as well. The put walls are 65.05. That's way down there. Guess we kind of almost tested it, and we got to delete this level. All right, great. Little morning cleanup. Here is where we are at. All right, so first and foremost, I'm gonna have to mute it, so I can cough. 1 sec. Dang it, I don't know how to mute it. I might have to cough in your face. Let's do that. That's better. Okay, first and foremost, Friday we had a big off of the open. We had some upside tendencies, and then we did sell off. I don't know if you guys remember us discussing these low to mid 40s, but once again on YouTube, we did get down there, so our pullback level was spot on. Big drive higher into Friday. Okay, we pull back here early afternoon. We continue higher, so early morning weakness, AM weakness. All right, PM rally. So bull markets open weak and close strong. They do not open strong and close weak. That's a bearish market. Opening strong and closing strong happens as well. It's very rare. That's a you're asking for too much market. Oh, my hair's all over the place. I'm going to fire my hairstylist, which is me. All right, so then we sell off a little bit to form the prior day cash close, which is on Friday. On Sunday at 6 p.m., we reopen and we gap quite a bit higher, around 35 points or so. We set the overnight high at 70 even, but then sell off to the 25 for the overnight low, which is right at the prior day cash close. So basically, if you just put this into context, the reason I walk you through it like that step by step is I want you to start building context on my 5 most important levels, and you just look at it. This is what you say to yourself. Overnight, we gap higher. That's a pretty bullish tendency. Okay, Thanksgiving week. We pull back. Thanksgiving week, by the way, is a bullish thing. Okay, we pull back into the support, which forms the overnight low, but it holds above the prior day cash close. Buyers step in, and we drive up to the overnight high, which is within 7 points of the prior day high. We're close to that top. The prior day low is all the way at 39. We're way, way, way above it, and we're above the open of the prior day as well. So everything is looking pretty bullish. The problem is, are we bullish enough to take out the prior day high? And I think it's possible with a pullback first and we go through the highs. So before we go to the trades, I want to show you that, we're still kind of intact on this downside trend. And in fact, I want to even pull up another chart for you because you deserve the best. You sure do deserve the best. All right, let me bring this one. It's my weekly volume profile chart. I can't wait to get another monitor. The one thing I am getting for Black Friday for myself is another monitor. The giant one is not enough. I know it seems like I'm joking, but this giant monitor is not enough. Okay, so we sell off down into the 20s. Okay, this is a level we had been watching long time ago. Even when we're back up to the 6,800, we're saying downside support would make sense into the 65.20, the 60 area. All right, why? Because there's a lot of volume there from August to late August to early September. This is the time period that formed that support block. Okay, so we hit it. So now the question is, do we have enough bullish momentum off of that test to bring it back up? I think we're starting to see a lot of resistance at the 20 to 40 level. We also have a call wall there, but that could be a good target for the long side. If I get long now and we get up to 67.20, believe me, I'm not complaining for a 50-point move. Definitely not complaining. So today's trading plan then is this. We're bullish. How long can we maintain this bullishness? That's the question. So there's two trades I'm kind of looking for here in today's session. Actually, there's more than two. Can we take out the 77? All right. Like, the trade here would be to break above this level and kind of curl back into it, see the order flow pattern that we want to see, the big mysterious order flow pattern, and then that could be the backbone on the long trade. That would be a break and retest. So if we do get that, then we're targeting the 6,700 even as the first level. Okay, I'm doing this on a trackpad. Don't make fun of my writing. It's going to hurt my feelings. Okay, that would be the first target, T1. And then above there, the 20, 67.20 is T2. Don't make me write it, please. That's the first trade, break and retest. The second one's going to be a pullback for me. And I'm not going to try to fade these levels here. All right, I'm not going to try to get short here. I'm just not. I'm going to let it come down to my support, and I'm going to take it on the way up, and I'm going to rejoin the trend. All right, because I don't want to fade it. It's bullish. I don't want to fade it. I don't want to get into mean reversions this week. I just want to give myself a week for my body and my mind to relax and make the safe, calm, rational play. I'm not trying to stretch it this week. I'm trying to be average Joe for Thanksgiving week. All right, what would average Joe do? Probably get stopped out. Sorry, bad joke. But aside from that, 66.44 to 48, this is the level I like. There's a lot of positive delta and negative delta clustered in this level. The 44 to 48 here would be my second pullback long, and I would need to see an order flow play occur. All right, anything below the 23 on today's session starts to look very bearish. Anything above the 77 starts to pull in some more buyers and some gamma hedging as well. Those are the two breakout levels. If you were within the range, if we stay within the range, I'd like to try to buy it down here, 44 to 48 one time. And then if it fizzles out in either direction and it doesn't really give me the drive I'm looking for, then I'm going to box it out and say I'm taking the upper end or lower end of this range. I don't necessarily like to play around the range too much. I like trades at fresh price. I like to see the edges broken or trade at the edges. I like to trade here and below and here and above. I'll try to leave this middle stuff out of my trading strategy, but I will take it today at 44 to 48. All right, so that's the plan. Ready, guys? Let's recap it really quick and let's say goodbye and our love yous, and we'll see you tomorrow. So 44 to 48 pullback, that's would be a decent long, or the break and retest of the prior day high and overnight structure. These are the two trades I'm looking for. If we get down below 25 and it breaks down and it looks bearish, I'll try it, but that trade I don't think is going to happen. I'm only planning to trade for 1 hour today, so let's see what that brings us. But that's the review. That's the trading plan. That's pretty much everything I have to give you for today. I love you guys. I hope you have a great start to the shortened holiday week. And remember this, it is a holiday shortened week, so things can get a little goofy. This is like a lighter version of OPEX, options expiry days, where things get a little wild. Some of these trades may not be respectful to any levels. Some trades may just be an institution coming into an illiquid market trying to put in their trade, which is either hedge trade or increasing exposure, whatever it's for. You're getting the month-end window dressing period that's opening up. So don't let it beat you up. Expect the unexpected. You're going to get some left hooks out of nowhere in this week. This is the cost of you trading during a holiday shortened week like Thanksgiving. This is the week most traders take off, right? I'm going to be honest with you. This is the week that most traders take off, and then it kind of signals the wind down period of the year for a lot of people. All right. So I love you guys. Take care. I'm going to be here with you. I'll see you tomorrow. And let me remind you lastly of our very own Black Friday holiday sale. That Black Friday is this Friday. And we got a great offer this year. We're giving 30% off to any one product or bundle that you build. You want to buy the trading room for 6 months, we'll discount it. You want to buy it, well, actually not 6 months, but you want to buy it for a month, it's discounted by 30%. You want the course, it's discounted by 30%. You want them both, they're both discounted by 30%. So 30% off everything. The one sale of the year we typically do is Black Friday, and we get a little more excited for it and offer more. So hopefully it gives you a chance to consider joining our community and see what we do inside the trading room after we end these morning market updates. I love you guys a lot. I know some of the members from the room are actually here. So Marco, we'll see you inside. Hector, OTM, Marco, J-Rad, Polly, Lewis, and David.